Welcome to the 2026 Investment Update. My name is Paula. With me is Greg Smith, our investment specialist. So Greg, we're right into a new year. Tell me a little bit about 2025 and how you think that went along.
Yeah, and great to be here. But yeah, 2025, what a year. We had tariffs, we had trade wars, we had tech triumphs. And amidst all that, markets had a really strong year, and a lot of indices globally made fresh record highs. So if you look at the US, S&P 500, that's the broad benchmark, that was up around about 16%. NASDAQ Composite, that was up around about 20%. And yet indices in Europe and Asia do even better, some of them. Technology, AI in particular, was a big driver. We know all about that, and that was really good for all the strong AI and tech exposures that we have in our funds. Wasn't just about technology though. Precious metals that had a really strong year. Gold and silver, they were on the charge. So that also worked out well. We had a couple of gold miners in our funds which more than doubled. If we look at New Zealand and Australia, these markets were a little bit behind the US, didn't quite match the same gains, but both had positive years, and both indices also made record highs during the year. And what was also interesting as well was some really significant individual performances. So A2 Milk, that was up over 70%. Freightways, that was up over 35%. Both names are held within our funds. And also across the Tasman, Property Group, Charter Hall, that was up around about 35% as well. That was a great outcome for the fund. It was a stock that was only added back in May of last year. Overall, really interesting year, really extraordinary year when you think about it, but one that also highlighted the importance of an active approach to investing.
Excellent, excellent. So now moving on to 2026, what themes do you see globally, just looking at the markets in general?
Well, it's already started off quite interestingly, hasn't it? You've had President Trump effectively organising the seizure of Venezuela's president. You've had him claiming he wants to acquire Greenland. So it's also got off to a bit of an interesting start. But look, stepping back from that, we do see global markets having a strong year again this year. And that's going to be underpinned, in our view, by the US economy, the world's largest economy, avoiding a recession, having a soft landing, and central banks being supportive. Just on that note, we're going to have a new Fed chair in the US, and that's going to be one appointed by Donald Trump, and we see them supporting another 2 rate cuts in the US this year. Inflation's still above Fed's target, and what's also going to be interesting is this new dimension we have with Trump looking to control, or saying he wants to control, Venezuela's vast oil reserves. Now, they're the largest oil reserves on the planet, so that could have an impact on inflation. So it'll be interesting to see which way that goes. But I suppose it just sort of reinforces the importance of geopolitics. If you look at, I suppose, things generally though, we expect to have a positive year this year. And I think that also could increase the levels of merger and acquisition activity that we see this year, particularly in the technology sector.
Oh, so that brings us on to the next question. You know, what are some key themes that you see happening in 2026, and especially looking at that technology?
Yeah, for sure. So is it a bubble? Is it not? We think the AI narrative is not one that's going to burst. So we think what will perhaps play out though is that the distinction between the winners and losers from the AI narrative will become a lot clearer, and it could well be a lot more about execution. It is worth pointing out that there are parts of the super cap tech market that are a bit extended, or certainly not cheap from a valuation perspective. And I think that really reinforces the importance of a selective, active approach to investing rather than a broad-based, sort of non-discerning one. But yeah, I think in terms of technology, AI is still going to remain a narrative. I think a big part of that is going to be power. We all know the tremendous power requirements from AI. So I think if you look at power generation, energy infrastructure, they're going to be really important themes this year and really important sectors and companies to follow. So the hyperscalers, if you look at Microsoft, Amazon and Google, they're building out data centers rapidly, and that's only going to increase the need for reliable, scalable power. Another thematic we're looking at, and we think will only grow in terms of its importance, is robotics. Demand for automation to basically reduce costs, improve productivity and address labour shortages. We think it's going to be increasingly important across a variety of industries. Not all about technology though, although it's a little bit related in a way. Waste management. So that's going to be important not just this year but going forward. So current trends, global waste volumes are set to increase 70% by 2050. So we think that's something that only gains in prominence. So a means to sort of look for solution with respect to recycling, recovery and waste to energy solutions. So that sort of ties in a little bit with the technology theme. But yeah, interesting year. I think it's going to be an important one for, I suppose, picking key themes as well.
So now bringing it back home, the outlook for local markets, New Zealand, Australia, what do you think investors should be looking for?
Yeah, let's look at Australia first. Look, we think that market does well this year across the ditch. We expect to see new record highs. I think what's going to be important there is that the RBA, Reserve Bank of Australia, they're actually going to start tightening policy or raising interest rates, and that's against the backdrop of a really resilient economy. And also China. I think the recovery there, we think, potentially surprises on the upside. Now, as for New Zealand, also see a strong year there for our local market, see new record highs there, particular demand for our electricity, property sectors, and also industrials or cyclical sectors which potentially have bottomed. And I think the appeal of our dividend-heavy market will also come back into focus given interest rates still remain relatively low and are probably likely to remain that way. Of course, on interest rates, the Reserve Bank of New Zealand has got a new governor, Anna Brayman. She'll probably want to stamp her mark. She's got a refreshed team as well. Our base case is that rates in New Zealand remain on hold through 2026. However, we wouldn't rule out them putting through a cut in the first quarter, just if that economy doesn't start to bear as much fruit as they perhaps thought. But for the second half of the year, we see our economy really picking up. We see a lot of those green shoots becoming a lot more visible. And of course, we've also got the $3.2 billion Fonterra payout as well, which is going to provide trickle-down effects to the economy and provide a boost. Also, we've got an election year as well, haven't we? So, of course, capital gains tax, that's going to be on the radar, but also potential reforms around KiwiSaver. So they're going to be key areas of debate. So shaping up to be a really interesting year once again, one in which a active approach and a well-informed approach to investing is likely to be really important.
2026 is looking to be really exciting. Please remember to subscribe and leave your comments below. Thank you for joining us.